Hi, my name's Sam Spring. I'm President and CEO of Kincora Copper. Kincora is an active explorer focused on the central west of New South Wales. We're looking to do multiple deals. We've done 6 deals to date that have unlocked 110 million of potential partner funding. We've seen 5.5 million of exploration to date. We're looking at doing deals for our more flagship projects. And only in the last week, we've also announced a very significant capital raising for the company. So it's a great opportunity to have the opportunity to walk through the story briefly. As this slide deck shows, deals and drilling. This is our core yard recently with some potential asset level partners as part of their review, looking at a further transaction that may take place in the near term. The usual forward-looking statements, I'll leave those to read at your leisure. This presentation will be up on our website. So who is Kincora? We've got an industry-leading team. That's obviously critical for any business, but particularly in the exploration stage that we're at. We're targeting tier 1 copper gold discoveries, the sort of assets that would sit well in any major gold, copper, diversified majors portfolio. As touched on, we've adopted a project generator funding model for our large-scale porphyry projects. What does that mean in reality? It means looking to get third-party in at the asset level for them to provide funding, look at providing technical endorsements for the nature of the concepts that we're looking to test and providing the capital to realise those. As mentioned, we've done 6 deals so far that have unlocked potentially 110 million of asset level partner funding. And we're seeing that resulting in deals and drilling ramping up with management fees. Management fees is a key element to this business model. We're currently receiving a 10% management fee for 2 of our earnings. That provides us a source of income. That means that every dollar that we have at the equity level goes further, and we're on track, we feel, to achieve a self-funding business model. So drilling recommenced in the 4th quarter last year. We've seen 11,000 metres of partner-funded drilling to date, 5.5 million of expenditure so far. And as touched on, further deals to come. Our flagship assets are retained 100%, and we're in advanced conversations with a number of groups regarding those. So the team, obviously critical, but the faces here that you can see on the board and in the technical committee are also very significant shareholders. About 40% of the company is represented by the board, on the board. The technical team has an excellent track record of operations, but at this point of where the business is at, most importantly, they've got a clear track record of making discoveries on a global perspective, but also in New South Wales. John Holliday, our technical director, is probably the foremost expert in North New South Wales porphyries. He was a key figure in the origination of the Cadia deposit and the discovery phases of that led to that being Australia's largest porphyry project. He's backed up on the technical committee with Peter Lehman, our VP of Exploration, who's been involved with multiple international discoveries, including the Tier 1 Reko Diq discovery in Pakistan. So very strong technical team, very aligned with shareholders and asset level partners by being investors, being big investors ourselves. So the asset portfolio, focused on central west New South Wales on the left-hand side here. We've also got a legacy project in Mongolia where we've got attractive asset level and equity exposure and an ASX listed explorer. They're looking to undertake drilling at 2 very large new discovery opportunities in the next quarter. But in central west New South Wales, we've done a number of deals. We've got a big project portfolio. Within the northern part of the belt, the Northern Junee Narromine Belt, we've done 2 asset level deals with Anglo Gold Ashanti, the world's 4th biggest gold miner by production. That's potentially $100 million worth of expenditure before Kincora shareholders have to look at funding that at the equity level or at the asset level. At the moment, we're receiving a 10% management fee from being the operator of that program, which again provides an income stream to offset corporate costs. We've also got asset level partnerships with a number of new generation tech explorers. Fleet Space for our Northern Molong project. Fleet in December raised $150 million. They're a very well credentialed explorer, and what we've got is a very innovative transaction structure. We're looking to do maiden exploration at the One Garden project in the second half of this year. At our Molong Belt project, our Condumble license, we've got Earth AI, another new generation Explorer AI model, raised 20 million US in January this year. They've undertaken 5 holes to date at our Condumble project, just recently done an airborne geophysical survey. With Fleet and with Earth, we're getting exposure to new generation exploration, and these projects give our shareholders material exposure to success. And with the Earth AI model, it's a success-based model where they fund the exploration. Only upon making a new discovery do they earn an NSR, a net smelter royalty, and we retain 100% interest in the project itself. This financing that we've just announced in the last week supports Kincora funding drilling on our 100% basis at our one non-porphyry project in our portfolio, our Condobolin asset, which sits in the southern part of the Cobar Super Basin, which is seeing significant corporate activity at the moment, with the CSA mine being bid for $1.6 billion by Harmony at the moment. The Condobolin project is a historical mining field. It hasn't had modern systematic exploration. It's within trucking distance to an existing mill seeking third-party ore. How you add value as a junior is significantly enhanced given the nature of that project, the historical high grade near surface, and a potential commercialisation route within trucking distance. In Mongolia, our partner, as mentioned, is looking to undertake drilling. We retain a material interest at the asset level. We're their largest shareholder at the equity level. Again, that provides our shareholders significant exposure, albeit we're not the operator of that asset. Within these projects that you can see with red oval outlines, these are our more flagship projects. These are the ones that we've retained 100% ownership, and we're now seeking third-party investors for a strong pipeline where we'd expect further deal flows to be a question of when, not if, and a number of quite advanced conversations there. These are the sort of projects that really would sit well in any major mining company's portfolio, being in brownfield settings next to world-class existing mines, with a number of attributes supporting them being extensions or potentially new discoveries relating to those existing world-class mineral systems. So a pipeline of news flow here really being driven by increasing drilling on a 100% and partner basis, increasing deal flow, increasing management fees, all of those providing multiple shots on goal for what we're in the game for, which is discoveries, and discoveries are the greatest value driver in the resource sector. So a corporate snapshot, this financing that we've just announced really puts the company in a very strong position. Over the course of the last 12 months, we've been delivering on our strategy with a number of new asset level deals. A lot of that news flow has been a liquidity event for a former largest shareholder to exit the stock. That only occurred in midway through May last year. So we've got a clean shareholder registry, and really what we'd like to think with this financing being led by a number of really leading North American investors, including Rick Rule, Jeff Phillips, who's helping quarterback our North American strategy. It really provides endorsement of this business model and the valuation that we feel that we have. And with this financing, we should be on track to achieve our self-funding business model, see really extensive drilling being done. And the third leg to, I guess, our multi-leg stool is further deal flow, further material upside from our flagship projects. So the foundations are in place. We've got a really attractive outlook for copper and gold. We've got the majors revisiting growth, and we're trying to fit that part of the market by effectively providing a credible team with large-scale assets that can fit their profile of outsourcing exploration. So really favourable structural setting and tailwind given the commodity mix and where the sector's at. We've got an industry-leading technical team that's got a discovery and operating track record that's second to none for a junior in this part of the world, that are significant shareholders and aligned with asset level partners as well as investors at the equity level. We've got projects that have a significant pipeline of tier one scale potential in mining and exploration hotspots. We've got a funding model that's scalable, significant technical endorsement for that model coming in from this financing, non-dilutive asset level funding. The ratio of third-party asset level expenditure to our market cap is really attractive. And I think, again, this financing that we've recently done provides endorsement to that. Really importantly, catalysts, more deals, more drilling, more management fees, and more discoveries. That's what we're in the industry for, and it's a really exciting junction, given where we're at with these value catalysts, to be able to introduce the story. If you've got any questions, my contact details are there, email address, mobile, as they are in any press release. Please be in contact if you've got any questions. But a very exciting company time for the company and Kincora Copper shareholders. So thank you again for the opportunity.